Banks are likely to report healthy profits in the July-September quarter of FY24 due to high credit growth. Their net interest income is expected to rise by about 18% and profit by over 25% on a year-on-year basis. The rise in lending rates, high credit offtake, and lower credit costs are the reasons behind this projection. According to a Bloomberg analyst estimates, private banks may see higher growth in net interest income or NII to over 24%. By comparison, public sector banks may see 12% NII growth. NII is a key earning source for lenders. On how the quarter will pan out, independent market analyst Ambrish Baliga says that despite lower net interest margins, public sector banks will see 14% NII growth and private banks 19%, aided by healthy loan growth. However, Baliga adds that there might not be positive surprises like in past few quarters, as the performance will be flat on a quarter-on-quarter basis.
If you compare with Q1, I think Q1 has been extremely good for most of the banking space and especially the PSU banking space. Although when we compare Y on Y, we could see a decent growth. Like for example, the loan book should grow by about 14% to 15% year on year. But then when we are looking at Q on Q, I think the growth could be more or less flat, slightly positive. So because of which there may not be really any positive surprises. It'll be as per what most of the analysts are expecting. There may not be any positive surprises like what we saw in the past couple of quarters from the banking space. So because of which, I don't think that there can be a major bump up from here as far as the stock prices are concerned.
A Motilal Oswal analyst said there would be pressure on interest margins due to factors like repricing of deposits. Banks have benefited from an immediate increase in lending rates in the September quarter, but the subsequent and delayed rise in deposit rates has created pressure on margins. According to domestic brokerage JM Financial, a compression of 10 to 15 basis points in NII is expected for banks under its coverage. The reason is that the impact of deposit rate hikes will start reflecting in the top line of these banks. On a negative note, hardening bond yields could mean there might not be treasury gains. However, a senior bank executive told Business Standard that banks were prepared for such a situation, which would limit the dent in treasury profits. Against this backdrop, what are the downsides that the banking sector could face?
Once the yields on the government bonds harden, and that's what happened in Q2, which actually means that the price of the bond comes down, because of which the yield moves up. So this will mean a mark-to-market loss in the bond book. So because of these losses, the earnings would be down.
On a separate note, a Motilal Oswal preview note said slippages would remain under control. The note added that this factor, along with higher recoveries, would further help in the continuous improvement in asset quality. Bankers told Business Standard that both credit costs and the amount set aside for non-performing assets remained under control. Meanwhile, the payout from the resolution of Sri Twin Finance Companies and ILNFS Tamil Nadu power projects would provide some benefit, especially to public sector banks. For his part, Ambrish Baliga says that while loan growth will be healthy at 14 to 15%, the worrying factor for the BFSI space will be its increased exposure to personal loans. Baliga points out that this category grew 31% year-on-year in August, accounting for 38% of the incremental bank credit according to Reserve Bank data. Similarly, real estate loans grew 39% during the same period. Overall, he warns that while bad loan recoveries may be robust, the increased share of unsecured loans can create issues going ahead.
If you like this video, share it and subscribe to Business Standard. For more news, views, and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram, and LinkedIn.
I am the blue of the limitless sky. I am the inspiration that lets success soar high. I will achieve, I will fly high. I am the I in SBI.
I'm backed by the nation's trusted bank, SBI, the banker to every Indian.